Good morning, everyone, and welcome to this year's digital edition of the Brussels Economic Forum. We're coming to you live from the television studios of the European Commission's Berlaymont headquarters in Brussels. I'm Maria Tadeo from Bloomberg, and today I have the pleasure to guide you through our numerous and I'm sure lively discussions about the European economic and social agenda. Now, this year is special for more than one reason, not only because this is the first time we have a fully digital event that's due to the special circumstances created by the coronavirus pandemic, but also because this is the 20th anniversary edition of the Brussels Economic Forum. Now, we do hope to retain the best element of the Brussels Economic Forum, and that is the quality of our speakers and the debate, and that this new format will allow you to join our debate online. The 20th anniversary edition of the Brussels Economic Forum does give us an opportunity to look back at the past 20 years of economic history since the year 2000 and to think about where we want to shape the economy of the future. Therefore, I would like to ask you to go back in time on a journey through the key economic milestones of the last 20 years and to look back at some of the speakers that we've had here at the Brussels Economic Forum over the past 20 years. And that's quite a few familiar faces I spotted there who have joined us here at the Brussels Economic Forum over the past 20 years, some of whom I'm pleased to say will be joining us again this year. Now, today's digital event will last until lunchtime, and we'll try to get a better understanding of the future of the economy in a post-pandemic world. And of course, we will be looking at the economic angle here, but in line with the traditional spirit of the Brussels Economic Forum, we also want to take a broader perspective and discuss the challenges and opportunities in terms of the politics, society, globalization, and trade. And it's still incredible to think just how much our lives have changed in just the last 6 months. And as you know, this has been a crisis of historic proportions, even bigger than the financial crisis of the last decade. And despite the rebound, economic output in the European Union is unlikely to return to pre-crisis levels by the end of the next year. This crisis has affected all countries and people across the world, although some clearly have been hit harder than others. In the second quarter of 2020, that saw the worst quarterly drop in the EU GDP since the Second World War. That's 11.7%. In today's event, we will discuss not just how to support countries, businesses, and people so they emerge stronger from the crisis, but also how the coronavirus has already transformed our lives and economies. We do hope you'll enjoy it and you'll come out of this with a clearer picture of the path ahead. We want to make this event as interactive as possible, so I do encourage every one of you that's watching online to participate. Remember, you can send in your questions or vote on others people's questions on Slido with the code EUBEF20, and you will also be invited to vote during the event. To ask questions, you can head to the BEF website or type Slido, that is SLI.do, in the website browser of your phone or your tablet. And for those joining on Twitter, and I know there's many of you on Twitter, please do use our hashtag EUBEF20. And without much further ado, allow me to introduce our first speaker of the day, Nadia Calvino. She is Spain's third Deputy Prime Minister, a Minister of Economic Affairs and Digital Transformation. She is joining us from Madrid. Deputy Prime Minister Calvino has been an outspoken advocate of an ambitious recovery plan for the European Union and has steered Spain's economy through the economic crisis sparked by the pandemic. We're very happy to have her as our opening keynote speaker and, of course, to hear her perspective on how to relaunch the EU economy. Minister?
Good morning. It's a great pleasure for me to take part in the Brussels Economic Forum again this year. I think it's really important that this flagship conference takes place, and the timing is perfect, as the coming months will be absolutely key in shaping the future of Europe. So warm congratulations to the organizers. In order to set the scene of the very intense and high-quality program ahead, let me share some thoughts on the current situation and economic outlook. Little did we know when we met at Flagey in June last year to discuss a new agenda for Europe, that just some months later we would find ourselves in a completely different reality, which would turn upside down many of the assumptions underlying our forecasts and plans. It has in fact been almost half a year now since the virus hit Europe, and lockdown measures were adopted in most member states. Our countries are going through unprecedented times. The pandemic is having a terrible impact in terms of human lives, and we are facing very complex challenges. Learning the lessons from the past, this time around, I think that Europe has stood up to the challenge and put in place in record time a very strong response, not only on the sanitary front, but also to preserve our economies and our societies and to ensure a fast recovery. It is clear that the fight against the pandemic is not over, and the current economic situation is still marked by very high uncertainty. We still have difficult times ahead. But thanks to the intense work undertaken from day one at the national and European level, we have come a long way in shaping the economic response to the crisis. In the first instance, we acted to ensure financial stability, to protect liquidity flows to the whole economy, to minimize the damage in labour markets and to preserve household income. This phase can be described as one of resistance. This fast and coordinated response has been key, I think, to protect a solid basis on which to build the recovery and avoid a more structural and long-standing damage, which would have been much more difficult to heal. To give you some examples, in Spain we increased the flexibility and public support for short-term work schemes, a mechanism which had not worked in the country before and is proving this time around to be extremely effective to protect more than 3 million jobs, avoiding the massive layoffs which took place in previous, much less intense economic downturns. We also activated a 100 billion euros public guarantee line that has already mobilized almost that amount in credit, mostly benefiting small and medium-sized enterprises. Moreover, we created a new specific allowance to protect more than 1 million self-employed workers affected by the lockdown. These measures, adopted in the first stage in Spain, amount to around 4% of GDP in additional expenditure and 10% of GDP in liquidity. But beyond these numbers, the counterfactual is one of very serious economic damage, not to speak of the social implications. We estimate that Spain's GDP would have fallen by 25% in 2020, and 3 million jobs would have been lost without this emergency action. There are, of course, differences on the size of the support granted by the different member states, but looking at figures, it is clear that we have all carried out an unprecedented fiscal effort. In parallel with actions at national level, we started to work together on the European response. The sheer size of this crisis that knows no borders requires joint action. Tribute must be paid to all European institutions, starting with the European Central Bank, which has ensured financial stability and thereby enabled national governments to adopt emergency measures. All European institutions acted fast, and I think that their initiative has been instrumental to the progress we have made in a matter of weeks. The temporary state aid framework, the coronavirus response investment initiative, the new short-term liquidity instruments put in place by the Commission, the EIB and the ESM to create a triple safety net for companies, governments and workers have been essential to ensure appropriate funding conditions and also to provide certainty. Certainty is probably the most precious asset in times of turbulence. Amongst these instruments, let me highlight SURE, which for the first time provides support for short-term work schemes and therefore targets employment protection, a backstop for the people. As we gradually started reopening our economies in May, the situation started to improve. In Spain, all available indicators confirmed that there was a turning point in May, and we have moved since then to the second phase, marked by reactivation. If we continue to control the spread of the virus, we are confident that the recovery will take the shape of an asymmetric V, leading to very strong growth in 2021. Our forecast, as well as those of the Independent Fiscal Authority and other analysts, point at GDP growth above 10% already in the third quarter of the current year. In order to support business reopening, economic activity resuming and new job creation, we adjusted in the course of June and July the different measures put in place. We fine-tuned short-term work schemes to incentivize workers' return to their jobs. We have turned our focus to solvency on top of liquidity, with a new public guarantee for investment as well as new instruments to provide capital support to strategic companies. We have adopted specific sector support programs for those most affected, such as tourism, transport or the auto industry. In parallel, unprecedented steps were taken to lay the foundation for a robust European response also for the long run. I am referring, of course, to the adoption of the 2021-2027 multi-annual financial framework and the recovery plan for Europe. The Commission's Next Generation EU proposal was up to the challenge and eventually led to the historical agreement of the European Council in July. From the very beginning, Spain had been calling for a European response so that we could emerge stronger from the crisis. We have put forward a number of proposals and played an actively constructive role, which I hope contributed to facilitating and shaping the final agreement reached after many long hours of work and discussion. I am sure other speakers will talk more in depth about the agreement, but I would really like to highlight this as a very positive, a truly historical step for the future of the Union. It is a European response funded with European debt. We will borrow to invest in our common future. It is commensurate to the challenge, 750 billion euros on top of the MFF. It's focused on grants, an absolutely indispensable element to prevent that excessive debt burdens at national level hinder investment and future growth, and with a special focus on the most affected member states. We have achieved key milestone, but much remains to be done. We are still fighting against the pandemic, although this second wave is so far much less damaging in terms of public health and death levels. The full economic impact will still continue to unfold for some months, as some sectors are still affected by the drop of domestic and global demand. This crisis is accelerating some trends which were already visible but have become a reality in a matter of weeks. Digitalization is a clear example, which has confirmed the strength of our networks, but also exposed the risk of social gaps and rising inequality if we do not act fast, starting with our schooling systems. Adjusting to these new realities has become urgent if we want to ensure that the recovery reaches every region, that no one is left behind. So we need to work hard to implement as soon as possible the national investment and reform plans and to activate the much-needed European recovery funding. We need to be efficient and agile in order to ensure that the economic recovery is strong and sustainable from the financial, environmental and social point of view. With every challenge comes an opportunity, and this time I think we do have a clear plan to seize it, to accelerate the transformation of our economies and to do it together. From the national perspective, we are committed to making the best use of the resources coming from Next Generation EU. We are working on a national recovery, transformation and resilience plan, carrying out a careful exercise of prioritization to ensure the resources are used to promote the transformation processes that the Spanish economy needs. The plan will comprise an ambitious agenda of investments and structural reforms aligned to the priorities of the EU and the European semester recommendations, with 4 key axes: green transition, digital transformation, social and territorial cohesion, and closing the gender gap. We will seek to achieve the maximum possible social and political support at home, working with the private sector, the regions and municipalities and social partners. We are determined to act fast and move quickly towards the third and next stage, the recovery. Implementing the recovery plan will be a top priority for all of us in the coming months, but we should not forget about many other issues that continue to be essential at the European level, such as completing the banking union and the capital markets union and moving forward with fair and effective taxation, including the digital tax. It is clear that the road ahead is still long and full of uncertainties, which I am sure will be discussed at length today. So let me close this introductory statement with two final thoughts on the outlook for the next 12 months. First, economic forecasting is almost mission impossible. But there are a couple of anchors to guide us beyond figures. Our focus should be on kick-starting growth and job creation as soon as possible. We should make sure that investment is protected, and we must act fast and decisively, for our actions today will certainly shape the future of Europe. And secondly, we have more than ever been made aware that we are on the same boat. So we better keep working together to deliver a stronger Europe, well equipped for the future and able to bring solutions and prosperity today and for generations to come. Let me close on this forward-looking note. I wish you all the best for the upcoming discussions at the forum today and look forward to seeing you in person soon. Thank you very much.
Well, thank you very much, Deputy Prime Minister Calvino, who is joining us from Madrid. That was an interesting perspective, which takes us perfectly to the next topic of our session. Now, I'm happy to say I'm joined here in the studio by the Executive Vice President, Valdis Dombrovskis, who will kick off our discussion together with our panelists that I will introduce in just a moment. And we'll be looking at what the new European economy could look like after the coronavirus. And without a doubt, the world will be a very different place after the pandemic, not just from a strictly economic perspective, but also from a social and geopolitical viewpoint. In this discussion, we'll be hoping to or looking at the economic ramifications of the pandemic, and we'll also look into how we can address the impact of the coronavirus on inequality, poverty, and joblessness. These are consequences, of course, that have been particularly harsh among the most vulnerable sectors of society, especially young people already hit hard by the previous crisis. And let's not forget what this means in terms of the geopolitics, trade, and Europe's relations with the rest of the world. And in the meantime, before we start, I do want to remind you that you can get in your questions. You can do that on Twitter, on Slido. Use the hashtag EUBEF20. But right now, I'm delighted to bring in Valdis Dombrovskis, Executive Vice President of the European Union and the Commission for an Economy that Works for People. And he will introduce our opening remarks for our discussions.
Thank you, Maria. Good morning. First of all, I would like to thank you for this invitation on the 20th Brussels Economic Forum. Slowly and cautiously, many EU countries are emerging from what was hopefully the worst of the crisis, but the pandemic is far from over. We will be navigating through stormy waters for some time. What Europe needs now is strong and inclusive recovery for everyone in all our countries. This is the objective of the EU's recovery package, to be a ship that keeps afloat in rough seas and gets us through the storm. For that, we need a ship with a powerful engine. Our recovery package is worth a combined 1.82 trillion euros. Based on 750 billion euros from Next Generation EU on top of a reinforced EU budget for the next 7 years. The engine's driving force is a recovery and resilience facility. It combines 312.5 billion euros in grants and up to 360 billion in loans to support reforms and investments undertaken by national governments. The funding is dedicated mainly to making our economies more resilient and investing for jobs and growth in green and digital recovery. So what is the next step before our ship can do its work? Those countries that want to draw as a facility should set out their reform and investment agendas for next 4 years and submit these plans to the Commission. Later this month, we will provide more detail on the next steps. Here we should think of projects with a common European interest. The facility will finance reforms and investments that fit with the European priorities and country-specific challenges as set out in the European semester. The aim is not to take us back where we were before the crisis, but to invest in Europe's generations to come. This is a chance to do things better, to make our economy more inclusive and resilient to future shocks, and to rebuild convergence across EU countries. One area to watch is an even pace of the economic recovery. The crisis is affecting companies and workers very differently depending on their activity and location. We are looking at how to support companies and workers given changing realities such as green and digital transitions. In order not to leave anyone behind, we will have to invest in skills development. And we will work to close existing economic, social and territorial inequalities as much as possible. Our economic recovery should be as fair, even and inclusive as we can make it. The European Pillar of Social Rights remains our compass for this, and we are working on an action plan to implement it. The national plans should aim to raise productivity growth with investments and in infrastructure and human capital, and reforms to facilitate structural shifts and also to help workers to adjust. At a time like this, it's important to preserve the integrity of the single market. It is the best asset for our ship to steer us through those rough seas. Ladies and gentlemen, when the Commission entered office, we presented our goals of making Europe's economy greener and more digital. The crisis has not changed these ambitions. In fact, the profound socio-economic impact means that it's more urgent to act. The green and digital transitions hold the key to Europe's future prosperity. As you may know, I have been working a great deal to promote sustainable finance and green investments to help Europe reach the goal of carbon neutrality. We need to push ahead with energy efficiency projects, electromobility, renewable energies, hydrogen, and much more. The financing and investment decisions that we are taking now will have significant impact on greenhouse gas emissions in the next decades. To take full advantage of digital opportunities, we need to improve connectivity across Europe, build a real data economy, and invest in new technologies like artificial intelligence, robotics, and the Internet of Things. This is how we can increase the EU's competitiveness and resilience, as well as create new sources of revenues and jobs. All this comes with a hefty price tag, of course. At the same time, national coffers are depleted after dealing with a pandemic, and government debts across Europe have reached record levels. The public sector is doing what it can to help. The EU's recovery package earmarks 30% of funds to support our climate objectives. It is the highest share of largest European budget ever awarded. But public money on its own will not be enough. We also need large-scale and forward-looking investments from the private sector. To help stimulate the funding, I will present a Green Finance Action Plan in the coming months. Both transitions imply unprecedented modernization and transformation across the board, widespread restructuring and industrial change in all sectors. These are areas where Martin Sandbu and Maja Göpel have a great deal of knowledge and expertise, and I look forward to joining them on the panel shortly. Ladies and gentlemen, Europe is on the brink of massive change and opportunity too. The recovery package, especially the Recovery and Resilience Facility, allows us, our countries to recover from the crisis and to embrace the future. Now we need to make sure that it's properly put into effect so that our ship of recovery can set sail as soon as possible. This is time for looking forward and not back. We need to weather the storm and come out to other side stronger. Thank you.
Well, Vice President, thank you for that. And at this point, do stay with us because our next panel discussion begins next. Now, let me introduce the other two speakers that are joining us from remote locations for this panel discussion this morning here at the Brussels Economic Forum. First, we have Martin Sandbu, who is the Financial Times European economics commentator. He is joining us from London. Now, Martin is one of the most experienced commentators on the economics of the euro area and has just authored a book called The Economics of Belonging, which looks into the causes behind the surge in populism over the last decade. Joining us from Berlin is Maya Goepel. She is Secretary General of the German Advisory Council of Global Change. Maya is a defender of new prosperity models as best described in her book, The Great Mind Shift. Now, to kick off this discussion, I do want to begin with a brief opening question to our two speakers. When you look at Europe at this point, 19% of Europeans will tell you they believe the Europe economy will emerge stronger from this crisis, but that's just 19% of them. So how can we make sure that we can build something that is better, that is more inclusive for European citizens? Maya, let's kick off with you.
Good morning to Brussels. Good morning, Mr. Dombrovskis. Good morning, Mr. Sandbu. I'm very happy about our remote conversation. It's quite a new experience. I do think I would like to tail on a few things that were already mentioned in the opening speech, and that is that we should be very cognizant that the model of development that we had before Corona hit was not a good one. I mean, in January only, we had at the World Economic Forum the Global Risk Report pointing out, in particular, environmental change to be at the top risks of hampering prosperity in the future. So we've been basically having a world risk society at our hands before we even entered the Corona crisis. And I think Joseph Stiglitz put it together really nicely when his book came out on Beyond GDP in December of last year, that we do have a climate crisis, we do have a democracy crisis, we do have an inequality crisis, but we are following lead indicators in economics that don't give us a hint that we could have a problem. And this is where I think we have to open up the story and open up the framework with which we're benchmarking our development, because the story of growth will benefit everybody and will be possible in continuation of one planet had been broken before. And now we have a really, really good opportunity when we disaggregate the data with which we measure, when we become much more clear on what we want to deliver, on the jobs that are bringing well-being, improving health, and restoring our ecosystems so that we have stability and security and prosperity in Europe and the rest of the world to be the future with which we can leapfrog. So I really think we should use the opportunity now, because we do have to change a lot of the path dependencies that we've been finding difficult to break out of before the Corona crisis, and now they're open to change anyway. We've heard that the macroeconomics is more of a crystal ball right now than anything that is predictable in a reliable way. And so to really take the opportunity to make sure that we're very clear on saying what we want to achieve, and to go into measuring that and making that transparent and making it the new narrative of Europe. So a green and social deal, for me, seems to be the promise with which we can guide the COVID recovery packages to meet people where they are and to take into consideration the concerns, especially also on the connection between health and our environment, as the EEA reports only today have shown again with regard to pollution and the health impacts that come from it. Thank you.
So, Maya, green social deal. And now I want to ask that same question to Martin. Do we need a new model, and how can we do it?
Well, you pointed out, good morning, first greetings from London. You pointed out that only 19% of Europeans feel good or optimistic about the economy. The best way to make people confident about the economy is to make the economy strong. It's a simple message, but we actually have to do the work. So I think, two overarching principles are important here before we get into all the details. So one is that the people of Europe need to feel that the policymakers have their back. And to be fair, governments and the EU as a whole have done a good job in trying to protect people from the fallout of the pandemic. But it's crucial now, I think, that we build on that and don't fall into the trap that we fell into in the previous crisis and remove support from the economy too soon. It's really crucial to keep strong demand growth up as we go into the next year. The second thing, and here I want to echo some of what Maya was saying, is that people need to hear that there's an awareness at the top that we should not just rebuild, but rebuild better. And it can't just be the words, it has to be the action. So of course we need to see that the opportunity is taken from this disruption to reorient our economy further in the green direction, but also socially we need to remember that those who have been hit hardest, health-wise, but in particular economically by the pandemic, were the people who were already struggling the most in the imperfect economies we have in Europe. People in precarious work, unpredictable work, often underpaid work. Those are the ones who lost their jobs and lost their livelihoods in the worst of the lockdowns and still face the biggest uncertainty to come. So it needs to be very clear, and not just in words, but in action and in results on the ground, that these people who are already drawing the shortest straw of economic change are now going to be taken care of.
Well, Martin, thank you so much for that. And I do want to now start with the Q&A, and please feel free to interact with each other. And, of course, if you're watching this, to send in your questions. The hashtag, of course, is EUBF2020. And, Maya, I want to kick off with you and look into the future. The next generation EU budget, of course, a central part of that will be climate change and how to get on those very ambitious targets. Do you worry, however, because of the short-term economic impact of the corona crisis, that we could see backtracking of that, become less ambitious on those targets?
Obviously, that is the center of the debate right now, and I do think that it is very, very crucial to make sure that we are showing what the ambitions are and why it is a win-win situation. If we're really tying in solving the problems that we had identified before by using the money that we now have to put in place out of the public pockets to create the kind of jobs we need to make the transition that Mr. Dombrovskis was talking about, the greening of the economy, and the digitalization, to really put that at the service of a sustainable development model. And to be very clear also on the statistics, because there have been a lot of reports showing that, especially in the renewable energy sector, for example, there will be many more jobs if we go for a decentralized and renewable energy system rather than with a centralized one that we had right now. There are similar endeavors looking at the promotion of jobs in comparison to what we have right now in a linear way of using our resources from a circular economy, where we're going into having to reshape business models from just selling and then waiting until it's in the dump in the fill, and then maybe recycling some of the resources into looking at what can be sharing economy business models, so that we're much more leasing and using the same kind of hardware or infrastructure for delivery on human need satisfaction for multiple people, instead of all of us storing a lot of things in our basements, taking up a lot of resources that we hardly ever use. So a whole circularity building into the economy can create a lot of new jobs. And this is why I think it is very crucial not only to look at who might lose, which is obviously the stronger impact, because often those business models are also well connected to the current administrations, to the media, and have the surplus money to also make their voices heard in the public. But I do remember very strongly Yanis Potočnik saying clearly, when we were talking about a resource efficiency package some 10 years ago, that the losers shout loudest, and it must be the role of media and of civil society, but also of the companies themselves and of politicians, to show what can grow when we're actually looking at structural change. And I was just naming the two sectors. I think agriculture would be another one where it's really high important highly important to act sooner rather than later, because all of the economic models that are looking at the costs of further environmental destruction show that it is much better, also purely economically speaking, to protect biodiversity, to ensure we're avoiding climate catastrophe. So all of those benchmarks, all of those calculations of cost benefit and the job creation impetuses that come with it and the health benefits need to be put firmly at the center of the calculations of what makes sense to invest in right now. And the emphasis on workers, on reskilling, on future-proofing our education system, I can only second, but we've had these conversations as well because of the digital revolution that's taking place anyhow. And it is very affirming, I find, when you look at the skills of the 21st century that are being requested from agents like the World Economic Forum and businesses with regard to systems thinking, anticipation, emotional intelligence, critical thinking, etc., for delivering on much more complex systems of working and new technologies with what the Sustainable Development Education Agenda had been putting forward already for people to be able to understand the linkages between the social, the economic, the environmental, and the constant binding back of every activity that humans are undertaking with the possibilities of our planet to replenish the kind of resources we'll need in the future. So with all of this endeavour to really show the linkages, I feel that we should be able to avoid the backtrack, but it does mean facing structural change and to look at this as an opportunity where a lot of public money is needed anyway, a lot of support and direct support. We heard about the grant schemes to really unlock the path dependencies that were already called out before Corona as not being helpful, as not being sustainable, and to really take this crisis also as an opportunity.
And speaking of public money, of course, the other big pillar to this recovery, we talked about the European Commission, but the other one is the European Central Bank. And Martin, I know that you recently wrote about this and you suggested perhaps that it's time for the ECB to think about a new mandate. What should the new mandate look like?
Look, I think we need to think of fiscal policy and monetary policy together. Their job is to stabilize or sustain demand growth in the economy, and that is crucial. Let me give credit where credit's due. The ECB and also the EU institutions and national governments have gone to unprecedented lengths to support demand in this crisis. But I still think we need to worry that they will do too little rather than worry about them doing too much, partly because we really need to learn from the last crisis where the ECB turned to tightening, budgetary policymakers turned to fiscal consolidation far too soon and caused a second recession. Let's not make that mistake again. The Federal Reserve in the US just changed its mandate by saying, look, we realize that when we get close to what looks like full employment, that is good because it drags people into the labour market, people who were previously on the margin. That includes young people, who we've already mentioned and we'll talk more about. So let's stop worrying when we get close to higher employment to say, oh, inflation is just around the corner. No, if there's no inflation that's visible, let's keep stimulating. So this is how the Fed has changed its approach. I think the ECB could very much do the same thing. And let's remember that in the legal mandate of the ECB, in the treaty, it doesn't say it should only look at price stability. It said it should ensure price stability, and then it should support the European Union's other economic goals. And those goals include full employment. They include a socially cohesive economy. It includes protecting the environment. So all of these things are already legally very much legitimate and indeed required for the ECB to do. So in a sense, it's even just taking full cognizance of the mandate it already has, but that will mean continuing to shift in this direction or giving more support to the economy.
Well, I have a feeling we're going to be hearing a lot about the European Central Bank and that mandate going forward. But I want to bring the debate back to the Executive Vice President Dombrovskis, who's with us today. You know, there's a whole debate happening in Brussels about the fiscal rules, about whether those limits, that 3%, 60% debt to GDP, should be changed. They've been halted now because of the corona crisis, but you would have a bigger rethink about whether that applies in the future.
Indeed. I think it's important to distinguish those two things. So what we have done, we have currently activated general escape clause in line with the current fiscal rules, meaning that in a time of severe economic downturn in EU or Euro area as a whole, exactly what we are experiencing now, we do not set quantitative targets for deficit and debt for member states. And what we recommend now to member states to do is to take necessary measures to support companies, to support workers, because what is important right now is to preserve as much as possible the productive capacity of European economy. The more we preserve it now, the faster we can recover. Then, of course, there is a more long-term debate which concerns EU fiscal rules. Indeed, we launched this public consultation early this year, and we intend to come back to this discussion and to discuss what is possible changes for EU fiscal rules. As you know, already in September last year, European Fiscal Board wrote a report outlining some ideas on simplification. So sure, we will expect more debate on this. But in any case, what will be important in this discussion to preserve the right balance between supporting the economy and ensuring medium and long-term fiscal sustainability.
But you do get a sense that the Commission is open to that debate, to have an open public debate about whether the rules work.
Indeed, we are having this debate already. We launched a public consultation, and as I said, we are going to return to this debate now in due time.
And of course, we are talking about the impact of the corona crisis, and the other big issue has to do with the social contract and how the most vulnerable sectors of society have clearly been exposed to the coronavirus, but also been hit hard by it. So, Maya, how can we address that social inequality in a way that's sufficient? Because we talk about this for years and years and years and years, but how can we actually fix it now and use this to narrow that gap?
Mm-hmm. No, I think this is exactly where it's necessary to think about the green and social deal, and to be quite clear about the structural trends of trickling up of wealth and income, and unfair development of wage levels, and a lack of a minimum wage agreement across Europe. All those have been discussed for a long time, and I think it has been now already, with the concerns about populism, that this notion of inequality and fair chances to participate and shape society have come to the fore before. And now we do see that in the structural change there is a big role for the state anyway to support the transition in many sectors, and this is why I think all the work that the European Commission has also been doing in trying to set up just transition funds, and to acknowledge that it's not only printing money and putting it out there, but also to make sure it's got a directionality, which is the health and the environment and the good jobs, and the upping of those jobs that we've now all understood during the crisis are really at the core of making people feel safe and feel well. And at the same time to understand that this is actually an engagement process. So the types of governance and the way that entire regions might be able, when they're looking at transition periods out of basically coal dependency in some of the places in Germany and other regions in Europe, or when we look at agriculture, those will be very much place-based strategies that will have to be looked at from a more regional point of view. And so for me, this whole just transition mechanism and the acknowledgement that it is a governance concern there as well that needs for more participation will be essential to make the proposals that are already on the table understood, make them negotiated, but make them negotiated in a way that really involves the citizens in the different places, and not only have political representatives and representatives of, in most cases, big corporations, and then maybe the unions, depending on how the economies are organized, deal it out. We have to have much more tying back with the population to also there regain the trust. And I do think that it is high time to maybe speak a bit, we're talking a lot about the future of work, but we should talk about the work of the future. Also there, to be clear, what are the kind of jobs that we need to deliver on the Green Deal, on a healthy well-being economy, and then to facilitate the transition and the trainings, etc., in that direction. And as was mentioned before by Martin, we do have a different way of looking at spending as an investment right now, not only as an indebtedness of states, but we also should look at the income side, because some of the concerns that were behind the populist upswings were also about the inequality in the delivery or in the distribution of the burdens. So we are really now at the time where we could look again at a financial transaction tax, where we can look again at a very quick tightening of tax avoidance that is being closed down on within Europe, that we are really looking at taxation on digital corporations, that we're really looking at where can the ones that have the widest shoulders help contribute, making the budgets available with which we then have to support the transition. So for me, it's the two things at the same time, to look at the bottom, where we've really seen precarious developments, but to also look at the top, where we do see that there has been a lot of trickling up in the last 10 years, and we shouldn't repeat this from the first dealing with the financial crisis, but be much more clear that the money that's being used has to get where it's needed most, and also that we have to look at bringing some of the money back in from society and not only get it from the printing press.
And Executive Vice President Maya made a very good point now about the politics, because this has real repercussions on the way people vote because they feel left out. You know very well that in the previous crisis, that created this whole surge of populism across Europe. How can we avoid that again this time around?
Well, that is exactly the point why the European Commission is putting so much emphasis that we not only need green and digital recovery, we also need inclusive recovery and addressing income inequalities within countries, income inequalities across countries. And that's one of the aims of our economic recovery package, Next Generation EU, to address exactly those questions of income inequality, to ensure the process of convergence within the European Union, and we'll continue to put a lot of emphasis on this. And we'll continue to advance our work on social policy, as I already said in introductory remarks. We're currently working on action plan to implement European Pillar of Social Rights, which sets number of principles which we want to advance at EU level on social area, including on skills which were mentioned, including currently we are working also on a European framework for a minimum wage, and soon we'll be coming with concrete proposals in this area. We're looking, for example, when we discuss the changing world of work, how to improve the conditions of work for platform workers, which is a new phenomena, and working conditions are often far from satisfactory. How to ensure what we call social protection from all, ensuring that people are contributing to the social protection system and receiving from social protection system, regardless in what kind of work contract, in what kind of work relations there actually are. So this is something which remains high at the Commission's priorities, because indeed to have also political acceptance, we need to have inclusive recovery.
Right, so I take it you're saying it's not just the macro this time, but also making sure that people see that in their daily lives,
exactly,
that they see an impact.
Exactly.
And Martin, we're going to be talking with you in detail about this in a little bit, but I do want to ask you one question. You just wrote a book in which you say we need an economy in which we all belong. Do we not belong in the current one? Are there big gaps that you feel are just simply unsustainable over the long term?
I think, yes, we don't all belong. The economies don't work for everyone. And this has been very much a long time in the making. For the last 4 decades, you've seen increased polarization in pretty much all Western countries, including all European countries, or virtually all European countries. Income inequality has gone up, wealth inequality has gone up, and regional inequality has been going up for decades. So instead of poorer places catching up with richer places, typically the capital cities, we've seen the opposite now for decades. And this is a big part of the root of the toxic politics we've had to deal with. Now, the pandemic reinforces all of this. Again, it's the people who are already being left behind who are facing the greatest increase in risk, both health risk, but in particular economic risk, from everything that's happened this year. So everything that has happened this year makes even more urgent to restore this economy of belonging, as I call it, that had already been disappearing for decades.
And just to move into the final part of our Q&A, the other big topic, of course, of debate is globalization. Is this the end of global trade as we know it, the end of global, perhaps, politics and multilateral trade? So I do want to ask you, Executive Vice President, when you look at the European industries, when you look at countries like Germany, France, Italy, we're importing something like antibiotics at the height of the coronavirus. Many European citizens do ask themselves, why are we not making this here? Why don't we have access to it in our own countries? So where do you see Europe now on a bigger picture scale when you look at new industries and the industrial place for the EU?
Indeed, if we look at the process of globalization of international trade, well, first of all, I would like to emphasize that from EU we continue to defend a multilateral, rules-based international system, including in trade. At the same time, we are also looking at lessons from the crisis and developing something which we call a concept of open strategic autonomy, because indeed we see that especially in healthcare supplies, which you mentioned, we were facing some shortcomings, so we're looking how to address them, whether it means more onshoring production in Europe, whether it means more resilient, diversified supply chains, not being dependent on a single or very few suppliers. And this is also the broader concept of this open strategic autonomy, that on one hand Europe remains open for business, but at the other hand we also should not naive, and we should be able to react and respond if third countries are treating our companies, our investments in an unfair manner.
And you make a very good point in which you say we want to be autonomous, but also respect the international trade rules, and multilateral is still a big word for the European Union. Can you have the two at the same time, be more independent, but also respect the rules on a global scale? Well,
there is absolutely no contradiction. On one hand, indeed, we need to respect the rules, and I think the world is better off if everyone is respecting the rules, and that's a big debate we are now having with a number of countries. But on the other hand, that does not prevent from looking at what are the weaknesses we have identified, exactly on the example you mentioned on health supplies, and we need to address those weaknesses and ensure that we are adequately supplied, especially in times of crisis.
Right. So there is room for that, more made in Europe, I guess.
Exactly.
That's what you could say. And, Maya, there's this whole digital transition that is being almost presented on a daily basis, this idea that, we're going to get new industries, digitalization in the form of 5G. There's also question marks about the role that countries like China should play in our societies. How do you view that?
Well, I think the key point for me, or word maybe, that was just mentioned was the European version, because we've done a big report about sustainability and digitalization, because we felt if there is a new powerful set of tools and technologies being invented right now, allowing or even forcing a transformation of our structures of economies anyhow, they should absolutely be geared towards solving the long-standing, long-analyzed problems that are on the social and on the environmental side, and not create new ones. And this is why I think it is really, really important when we look at the debate and the discourse around digitalization and what should be in place and not be in place, to say Europe wants to have its own path. Because if I look at the societal models around the most powerful digital companies right now, China and the US, I don't think I would like the European continent to adopt a similar societal model with an absence of the protection of citizens' rights to their own data, with an absence of protections against surveillance, with a data collecting race, basically, that will pump up more and more environmental pollution, because we are storing all the data instead of making some of that just common good For example, the UNEP has put forward an idea of a planetary ecosystem, so we get much more intelligence as open source, as open data about ecosystems and their developments, how they're accessible instead of stored on multiple servers at the same time in different places. So I think there is a high time to really look at what are the business models and the partnerships with which we want to drive that digital revolution so it can be put at the service of solving the problems. And then we are looking at data policy. I think it is high time to really differentiate between private data, company data, then maybe some state data, and also the publicly available one, to treat a lot of the developments not as individual apps or items anymore, but as infrastructure, and then to look at how have we been looking at partnerships between public and private when they're developing infrastructures. And also at the same time to really say, how can we use this to really inform us much better from consumption choices to creating the products we have, to really enabling a circular economy with a good platform about where are the material flows right now, how can we ensure that we get towards zero waste patterns, what's the industrial symbiosis that's necessary, what are the data provisions that are necessary for that, and how can they be done safely. And this is why I think it really has to be looked at from a political economy point of view, because the surrounding of the technology is going to determine what it is going to be geared at, with which interest, and who's going to benefit from it most.
And Maya, you mentioned it a few times in your remarks right now, this idea of surveillance, safety, European citizens knowing exactly what's being done with the data. Do you feel at this point we just don't know, that there's reasons to feel unsafe about the way that data is being handled right now?
Well, I do think that we have enough scandals to feel that there should be a growing concern, and to be having a very open discussion about why something like an innovation principle shouldn't be played out against the protection and the irreversibility of collecting that much data about individuals that you do really have a chance to affect their lives. And this is what we see with the social scoring system in China. And I find the degree of transparency about what people are doing every single day, how much money they have, what health insurance they have, etc., in the United States, even though it's said to be in private hands still, to a degree where it has a lot of direct impact. And we've seen a lot of evidence of this on how are people getting access to credit, which kind of schools do they get into, what kind of chance they have for jobs, etc., etc. So already we see that the use of data has a lot of impact about possibilities of people leading their lives. And that should be put center stage, and not in an ideological way of either way, but to really say, where is it helpful, but where do we also have to make sure that it's not being abused?
And Martin, ultimately, this is really about trust. You know, this is really about people believing the governments will work for them. How can we do that? How can we convince them that this time it'll be different? And we are seeing major polarization happening right now in the global political debate around this.
Well, the proof is in the pudding, isn't it? You have to actually do it so people feel it on the ground. But you're quite right that trust is important, and I'd like to just echo what Commissioner Dombrovskis was saying. There's no contradiction between freedom and rules. It's the point of democracy that we collectively author rules that we then live by. But of course that does depend on trust. We need to think that our leaders make rules in our interest, that they follow themselves, that treat everyone equally and fairly, and so on. Now, in the international, or global, I should say, domain, that is a challenge, because in some areas we may have the same preferences as other countries, like China, like the US. In others, such as IT, we probably don't. And then we're going to have to try to go by our rules. And if that means there'll be, let's say, data transfers between the EU and China, so be it. But coming back to the economy, really I think a lot of people are legitimately, they have lost trust. All these people who were left behind for decades, they have good reason to say, I don't trust that you'll do what's best for me. And then it's really incumbent upon the people who lead to earn back that trust. How do you do that? Well, you do that by, first of all, not repeating the mistakes of the past. Don't take the foot off the accelerator too soon and send the economy back into recession. Don't allow left-behind regions, left-behind groups, the young, the low-educated, to wither on the vine, as it were, on the vine. But really change your policies so that you start helping them. I think the Commission is kind of moving in the right direction, but there's a long way from action, from words to action, and there's another way from policy action to results on the ground. So we really have no time to lose.
And I do want to give time to some of the questions that we have from our audience that's watching this using the hashtag EUBEF2020. There's a theme that gets repeated a lot in the questions that says, this is from a user called Alfredo, how can you simultaneously protect citizens from the COVID-19 pandemic, so that is the health aspect, but at the same time stimulate the economy so we can emerge out of this huge crisis of big proportions? Can you balance the two, the health and the economy?
Well, first of all, it's worth noting that we are facing pandemics here, and first and foremost, it's a healthcare crisis. So we need to listen to epidemiological advice, what we need to do to overcome the pandemics. And that's what we have been doing in the EU. And all in all, we see that we are emerging from the worst of the crisis. We are not seeing a return to the generalized lockdowns as we had in spring. And we gradually are seeing economic recovery taking place. So what was important during this period of crisis was exactly to support the capacity of European economy, as I said, to support European companies and workers. And this we did with the help of large crisis package, which included SURE to support the workers, short-term work schemes, which included European Investment Bank, availability of loan to European companies, especially SMEs, which in case of need could include European Stability Mechanism. We allowed from a much more flexible fiscal and state aid rules so that member states can take action on ground. And all in all, we see that it has delivered its positive results. For example, the effects on unemployment were not as severe as we were expecting at the beginning, given the depth of the economic crisis. So we see that actually it helped to preserve the employment, and now we will be putting in place this recovery package to help with the recovery.
And Martin, I want to put that question to you too. Do you think there's a way here to balance both the social health aspect of this? I know you're not a doctor, but this is a big component of the idea of social well-being and the economy. Can you do the two at the same time?
I think it's a mistake to think that there's a trade-off and we have to choose one rather than the other. It does seem like the economic effects of letting contagions run, the fear and uncertainty that creates, is itself economically hugely damaging. So the lockdowns were also economically damaging, but they were necessary, and things would probably have been worse without them. So let's not deal in false trade-offs here. Of course, there are difficult policy choices to make, but one reassuring thing is that at the moment, at least, protecting individuals and stimulating the economy point in the same direction. So the wage subsidies and short-term working schemes we've had have sustained people's incomes even when they couldn't work, and that in itself is good for demand because they can keep buying from sectors that are still active. Otherwise, you would have got this repercussions that would have made the crisis even worse. But there are things we can do better. People who aren't in regular jobs and who can't benefit from these schemes have very often fallen through the cracks, so we need to update the social security systems, maybe something like a universal basic income style of benefit that helps those who fall between the cracks who are not in regular employment, or who will ultimately lose their job anyway, because, let's be clear, there will be job losses coming, even though we've staved some of them off. And finally, we really need to ensure and encourage and pay for investment. The Commission has estimated that European companies will lose between 750 billion and 1.2 trillion euros this year. And they make up some of that shortfall by cutting back of investment. That's exactly the opposite of what we need. We need to sustain investment. We actually need more investment. We had too little investment before this crisis. If you have more investment, you have more growth, you have more jobs, but it's also politically easier to direct that investment in, for example, a green transition direction. So we need to continue what we've already done. We need to spread it to more people than those who are in regular work situations, and we need to get investment going.
And Maya, how about you? What's your take on that? This is a question that a lot of people put to themselves. Can we do the two of them at the same time?
Right. I think I would just like to add a thought, which is working is not necessarily always upping demand. Quite a lot of work that needs being done right now, if we want to transform our business model, transform the products we're using, transform the technology, will mean that people have to spend time on changing supply chains. And we have had a lot of evidence in our research that formerly companies would say we're lacking the time, the money, or the skills to actually do this, even though then even the economic benefits of saving resources, saving energy, etc., will be higher afterwards. So to use the kind of transfers right now to enable people to keep on working on changing how things are done within the company, rather than having to up demand right away, for me is at least something that we should very carefully and very attentively look at, because that provides a huge opportunity to create future value because of this things that we're doing, having a much higher quality and having something towards technological leadership of what's required in the future. People are being active, they're learning something new, and they're having an income to spend, as Martin said, even if the company itself needs the kind of support in order to be running stable, have the expenditures that they're having for employment, whilst demand can't pick up yet. So transformation work in itself is something that usually has transaction costs for companies that they're finding hard to put up with when it's in a normal situation. So how can we find the good coalitions between the public funds and the private engagement towards really then changing the types of business models that are going to kickstart on delivering on the demand when it picks back up?
And again, taking questions from everyone that's watching us, and we're very happy that you're doing this and sending your questions, of course. There's another theme that comes up frequently, and it's this idea of the EU funding. You know, that money that will come through from the European Commission. It's an agreement that's never happened before. But there are questions about how can we ensure that that money is used efficiently? How can we ensure that it's used appropriately?
Indeed. Of course, when we discuss now of available money, and overall we will have, as I mentioned, 1.82 trillion euros over the next 7 years, so it's a very substantial amount of money. Now, when we discuss specifically the economic recovery part of this, member states will need to prepare their economic recovery and resilience plans, where they would need to ensure that money is spent in line with common European priorities, including green and digital transitions, that it's spent in line with challenges and issues identified in the European semester, where we coordinate our macroeconomic and fiscal policies, so in line also with country-specific recommendations. And we are also seeing initiatives from some member states, and from Commission side we support that it's also spent on common European projects or cross-border projects. So this is something which member states need to prepare now, and from European Commission side will be monitoring, ensuring degree of horizontal consistency, and indeed ensuring that the money is spent in line with priorities we have set. And once again, I would reiterate that we also have a 30% climate mainstreaming target for both the next multi-annual financial framework and next generation EU recovery plan.
And Commissioner, you know, one of the things about live television is that we find things while we're on the air, and President von der Leyen has just announced that you will be the next trade portfolio chief. That will be your next mission too, so you're taking on that trade portfolio. And I just have to ask you, we have you right here with us. First of all, congratulations, but also when you look at trade, what's your approach going to be on that? The situation with the U.S. looks particularly tricky.
Well, first of all, of course, I would like to thank President von der Leyen for entrusting these responsibilities to this. So I am looking forward for taking over this trade portfolio, of course, subject to approval by European Parliament. So it's indeed an important file. We are currently in turbulent waters as regards global trade, relations with US, relations with China, reform of the World Trade Organization. So I'm looking forward to work on all those important issues.
And, just on that, in terms of your approach, because we are now getting a lot of questions on this, now that you're the Trade Commissioner, again, subject to approval, what is your approach going to be? You've said multilateral trade is still key for the European Union. So is that going to be your main drive? And how tough are you willing to go on some of these negotiations?
Well, exactly. So, as I mentioned, we remain committed to multilateral rules-based international system. Also in the area of trade, and probably especially in the area of trade. So we're committed to work to the reform of the World Trade Organization, and indeed there are challenges to be addressed there. We'll continue to advance our trade agreements, which we are in different stages of negotiating and preparing with different member states. We'll continue to work with investment agreement on China. So there are many things to do, and of course it's important that while doing all this work, we preserve our European approach and our European values.
And in terms of WTO, I know that you just mentioned you still believe in it as an organization. As Trade Commissioner now, are you going to try to make it work now? Because it has been very dysfunctional for the past year.
Well, obviously, WTO needs a reform, and from European Union side, we had been proposing already proposals on how to reform WTO. We also need to get its appellate body back to work, because nominations had been blocked to the appellate body. It's currently not functioning, but it's important for being able to resolve trade disputes in an orderly manner. But in any case, we need international organization dealing with the trade, and therefore we need WTO, and we need to reform it.
And before the news broke, we talked about this idea of a European identity and Europe being more autonomous. We're stuck with a trade deal that could potentially happen with China, another with the U.S. Are you confident that you can negotiate the two at the same time and get to something maybe by the end of the year?
As regards our negotiations with U.S., as you know, we are currently rather discussing some mini deals, if you want, some targeted deals. In a sense, good news is that we are avoiding a further escalation of trade conflicts we saw some year and more ago. And in case of China, indeed, we are working now and focusing on investment agreement. Of course, it would be great if we were able to conclude it this year, but there I would say substance before deadlines. It needs to be ambitious agreement, and indeed to address challenges and imbalances we are facing in our investment relations with China.
Right, so that's a good word that you mentioned, imbalance. I guess that's where you want to take it, that you feel that the relationship needs to be more balanced at this point.
Exactly.
That's the goal, and they're aware of that. That Europe is aware that the relationship at this point is just not equal.
Well, and that's exactly subject of negotiations we are currently having with China. We had a round of discussions, EU-China high-level economic dialogue in July, where we were discussing in depth all those issues, and from EU side clearly also indicating the problems which still needs to be addressed.
And I guess tough but firm, that's how you want to be as a commissioner. You're going to be ready to fly across the world. I'm sure DC may be on your agenda next. But I do want to ask you on a bigger picture, what is the number one priority for the European Union now? I know you're taking on more roles, more trade portfolios now, but what is the number one thing you think we need to address at this point?
Well, probably if I need to say in one word, I would say implementation. Because we were able to agree on substantial crisis packages, and some of them are still to be implemented. We agreed on massive economic recovery plan, Next Generation EU. So now we need to put it properly in place, implement, make sure that this money really reaches the economy, this money really reaches the people.
So implementation of those agreements, of course, it's what really matters next. And I do want to put that same question to Maya and Martin. When you look at the European Union at this point, what is the number one thing we just simply have to get right now?
All right, I'll start with the green side then, because I do think that it is very, very crucial to use the opportunity that COVID has brought to us to really understand the connection between human well-being and human health and the environment and good business, to really make that the pole star of this development and to create much more transparency in the indicators that we're using. We need the natural capital accounting to be at the fore, and we need to make sure that this is the competitiveness edge of the European continent in the future, which will also lead to much more security and resilience. I am very happy to see that there is Resilience Europe projects, etc., taking place next week to really look at the policy implications of this. Is not only on medication, it is also on supply chains, especially in the area of food. We've really seen it. We do see the impacts of climate change on the provision of natural resources to the European economy. We're very dependent on imports. We do have geopolitical positions where it's not so easy to bank on the continuation of all the imports we now take for granted, even though the ambitions I can support there, but something like a border tax adjustment on carbon, etc., all those things come to mind. To really make sure that we see emerging from emergence, the planetary emergence that many organizations, Club of Rome and bigger alliance have been pointing out recently, needs for an economic response, because it's an utterly uneconomic development model right now, and that this has to come out into being a full government approach, and this is what we see with the Green Deal, and this is what we're really, really appreciative of. Instead of it being an environmental issue on the sidelines, this is the center of the business model of the future.
Well, thank you for that. And we're going to wrap this session. Of course, I want to say hi and thank you to Maya, to Martin, and of course to the Executive Vice President and now Trade Commissioner, to Valdis Dombrovskis. Thank you also for reacting to that breaking news here. Congratulations on the new job. I'm sure you're going to be very busy. And as for us, we're going to now take a 10-minute break. You can go make yourself a coffee if you're at home and also at work, and then just be ready to get back and to start voting on the next debate, which focuses on a very contentious issue when it comes to the economic response to the pandemic, and that is the role of the state. So please stay with us, and we will see you in a very short bit here at the Brussels Economic Forum. Now, welcome back to the 2020 Brussels Economic Forum Digital Edition. Now, this morning we've already had some engaging discussions, and we've already also heard some interesting perspectives about what kind of future we can expect after the coronavirus. And we are going to continue our event. And in the next session, we want to know which side you are on when it comes to a very thorny issue, the role of the state. Now, our next two guests have a very clear idea of where they stand, and they will attempt to change your mind on what is the most important question, or perhaps one of the most important questions when it comes to the handling of the economic impact of the pandemic. So now let's begin with our poll, and let's see what you answered to the following question. Now, this forum believes that an extended role for the state in an economy is inevitable and desirable after the coronavirus crisis. The question here, of course, is do you agree or disagree with the motion? The vote is open, so you can grab your phone or head to the BEF 2020 webpage and vote on Slido with the code, remember, EU BEF 20, and tell us whether you believe that there should be an extended role for the state in the economy, whether that is inevitable and perhaps even desirable after the coronavirus crisis. Now, we're asking you this question twice for a reason. First of all, we want to get your gut reaction to the question and just feel the temperature of the audience before we go into this debate. And then after, once you've heard the arguments from our two speakers, we want to see if that debate had an impact on your views. So we really want you to get voting on that. We want to use that hashtag. We also want you to vote on Slido. And then after that, we'll see whether or not the speakers managed to change your mind on this issue about the state and the economy after the coronavirus. And while you're voting, which I hope you are already, I will introduce our two speakers. Now, our speaker arguing in favor of the motion is Sharon Barrow. She is General Secretary of the International Trade Union Confederation, which represents 200 million workers in 153 countries. Sharon is a passionate advocate and campaigner for social justice, women's rights, the environment, and labor law reform. Now, that is for Sharon. You still have time to vote. Remember, the question is, do you believe an extended role of the state in the economy is both inevitable at this point and desirable given the impact of the coronavirus in our European economy? That is the question you need to answer. Are you in favor or against? And our second speaker, who will debate this time around against that motion of a bigger state in the economy, is Professor Alexander Stubb. He is director of the School of Transnational Governance at the European University Institute. He is joining us from beautiful Florence. And Professor Stubb, as you know, served as Prime Minister of Finland from 2014 until 2015. And among other positions, he's also been Minister for Finance and Minister for European Affairs and Trade. Now, the way this works is each speaker will get 8 minutes to present their arguments in favor and against, and then a 5-minute rebuttal. Now, let's see if we do have some results from our first poll. Let's see if we have that. You have it on screen right there, those results, which suggest that actually there should be a bigger state or a bigger role for the state in the economy. And actually, by big numbers, there's some 70%. So, Sharon, take it from there. You're starting with an argument in favor. You see that the audience does believe there is a bigger role for the state. So, Sharon, as I mentioned, the floor is yours.
Well, what a great audience to start, because we're going to have a tough time ahead because, yes, it's desirable. No question about that. But is it inevitable? Tragically, I think that's a matter of political will. Pre-COVID, you saw an incredible array of anger and despair from people around the world. And it was the result of a lack of collective will to protect people and the environment in the face of corporate and financial power. Let's have a look at what this looked like. You had a convergence of crisis, historic levels of inequality. That wasn't just income, although that was driving a lot of the despair. It was exclusion, race, gender, the plight of migrant workers worldwide, indeed dehumanising supply chains in our economic model that relied on a more and more liberal view of economic trade. And so the dominance of corporate interests, the 1%, and indeed, of course, financial sector interest included in that, was pitted against people and against, from workers' point of view, decent work, but against communities, against those vital public services. So why do I say this? We did a poll just a week before the lockdown in Europe, and indeed 75% of the world's people. Now, this poll covered 56% of the global population. 75% of the world's people actually said their incomes had stagnated or fallen behind. That's not accidental. It comes from the role of the economic model that people were struggling within. We had a climate crisis. You know all about that, of course, because many of you have lost lives and livelihoods, maybe not so much in Europe, but around the world because of extreme climate events. Many, for working people, their houses, their assets are becoming uninsurable because of the risk. So when you look at a crisis of inequality, a crisis of climate, and you recognise that even then the collapse of the global labour market was indeed on its way. 60% of the world's people, 60% of the world's working people actually are working in the informal economy. No rights, no decent work, no rule of law, no minimum wages, no social protection. That's not acceptable. And why? Because governments failed to regulate. And then the 40% of us lucky enough to work in more formal jobs or jobs with a contract, a third of those people are actually living in precarious environments. And that's the new areas of our economy that people laud. We applaud work of any kind, but not without the fundamental rights and security that should go with it. So when I tell you that the new forms of platform business or internet-mediated work, again, are informal. They have no minimum wages or income guaranteed, often no social protection unless they pay for it themselves. And, of course, they have no grievance procedures or rule of law, particularly outside of Europe. So when you look at the state of the global labour market, and they're the people making the profits for the 1%, then I ask you, is that fair? Now, we've heard it all from the corporates. Self-regulation, we'll get it right, leave it to the market. Well, that's what has happened. And indeed, I can tell you, because I've walked those supply chains, I've walked through those tribes of anger around the world, that people feel despair and they feel anger. And when more than, or almost 40% of the world's people have experienced in the last 2 years unemployment or reduced working hours, then pre-COVID, the vulnerability was extraordinary. And we can understand why there was an age of anger growing against our political leaders who didn't appear to want to regulate the global labour market. But indeed, multilateralism was also in tatters because people were demanding action from their politicians. So then, of course, you had COVID-19. It's still with us. We'll live with it for some time to come, but the impact has been astronomical. We're living through an historic age of global solidarity where people put lives first, and that's important. We support that. But at the same time, recognise that the cost of that actually has been the loss of some 400 million jobs in the formal sector. 1.6 billion of our brothers and sisters who, with no money each day, simply don't, no work each day, simply don't earn any money. 1.6 billion around the world face destitution every day. And 70% of those people have no social protection at all. So I can tell you that the role of the state is critical. If you're looking now at some of the advances on the social contract that unions and governments and communities have made through this crisis, including support for business continuity where it meant jobs and wage protection, then we can say many governments have done well, although the threat of withdrawing that support now is very, very, very intense. And that will throw more people back into that destitution frame. But what we haven't seen is really yet outside of Europe, the discussion where people and the environment have to be put first in a new economic frame. There are businesses who know that they need to change. But in fact, when you look again at the reality of the unfair competition flaw and the fight back to not regulate, take the big tech companies, that's enough. The big tech companies, in fact, have made billions out of this crisis because people have depended on the security of online shopping. Their workers are more often than not treated without any kind of respect or rights or social dialogue, let alone collective bargaining or even minimum wages. But it's the privacy that people are concerned about as well. And when we surveyed people in this poll, then the overwhelming majority of people know what they want for their governments to act. They want to see jobs, investment in jobs. Coming out of this crisis, we know that those jobs have to be sustainable. So employment and climate action are actually joined, in a marriage which governments have to respect. And yet jobs are easy if people have the approach to investment that is actually going to work, not the short-term investment that came out of the last crisis, the 2008-09 financial crisis, where we all supported government intervention to save the global economy. But at the point where business felt secure again, the marriage of the bond markets and the ratings agencies, debt simply was demanded back and austerity was born. That meant people's jobs, wages, social protection was indeed diminished. The risk was high and for many people it was real. So this time we need investment in jobs, we need investment in care and the jobs in care. If progress of women is stalled at every level, and indeed you see the health crisis because we haven't invested in our health systems, because we aren't a resilient global economy, or enough in our education systems, or childcare or aged care. There are jobs in care, and it's the fabric of our communities. But there are also, indeed, the support for women in those care provisions that enable them to work more broadly in the economy. So investment in care, investment in enabling green infrastructure, investment in repair of ecosystems. Industry policy is back. And as we look at areas of the transition that has to happen in every sector, must be a just transition, but how do we protect and grow jobs, even as we look at the carbon, border protection, the new rules around trade, all of the things that have to happen. This won't happen if you leave it to the market. We also need, of course, investment in skills, and we must come back to wages. I said it, and I'll just repeat it. The EU is, in fact, the only hope for a global floor for the current environment. There are one or two countries outside of the EU doing very good things, but overall, the global economy is in free fall. The global labour market is in free fall, and we need a new approach to investment and a new approach to debt, patient capital, patient debt, medium to long term. The EU's opened the door to that, to just transition, to indeed the investment in jobs, in an economic and social, the social pillar of rights, and an economic future that puts people first. So desirable, yes. Inevitable, corporate and the finance world will still argue, not all of them, but unless we are prepared to create a fair competition floor for those who want to involve people in their businesses at all levels, social dialogue, solutions for the future, employment, climate, and the role of the state desirable, but for inevitable, we'll have to fight for it. And I need you on the team, because it will be people's will that will make the political will possible.
Well, Sharon, thanks so much for that. We've heard the arguments, and now it's time to hear from Professor Sturp. He is going to argue against that motion. And Professor, the floor is yours.
Thank you very much, and good morning to Sharon and all of you from a beautiful and sunny studio here in Florence. Looks like I have an uphill battle, 80-20, and it's a real tough one. The first tough choice I had to make was one of clothing, because you told me that we have behind me a green screen, which means nothing black, nothing blue, nothing green, nothing white, and nothing stripy. So for a short while there I was thinking about coming here topless, but I thought, that would be pretty good for the Brussels Economic Forum publicity, but not good for my chances to become trade commissioner. Now I saw that Valdis Dombrovskis just snitched it, so I might as well take my top off, but I'll do that a little bit later. Having gotten that out of the way, let me start by saying that we human beings have a tendency to do three things. Number one, we over-rationalize the past. Number two, we over-dramatize the present. And number three, we underestimate the future. And in this spirit, I will argue today, counter to Sharon, that I actually think that an increased role for the state is inevitable in the short term, but undesirable in the long term. And in order to back up my argument, I will give you 3 points. Point number one, I am a Nordic capitalist. What does that mean? It means that I believe in the Nordic welfare state as probably one of the most functioning economic and social systems in the world. There are a lot of misunderstandings about it. For me, Nordic capitalism is very simple. It basically means free and open competition driven by enterprises and entrepreneurs who, at the end of the day, pay a very high level of taxes, so that the most important part of the economy, secondly, the state can distribute that income equally and fairly among its citizens. So I believe in free competition and a strong and secure welfare state. Competition is taken care of by the market. Welfare is taken care of by the state. And anyone who tries to make this into a completely black and white argument whereby there are only market interests and only state interests, I think are old-fashioned. Marx is dead. Adam Smith is dead. We have found a third way of Nordic capitalism, and let's stick to it. Secondly, I think what we have seen in the past 30 years is an interesting development in the debate between market versus state. And I think Sharon is actually winning the argument on this. Because remember, in 1989, the end of the Cold War, the collapse of capitalism, collapse of communism, and to a certain extent old-fashioned socialism as well, it was all about market liberalization and capitalism, especially here on the European continent. Eastern and Central Europe, even Russia, were pushed to market-oriented free movement, free capitalism reforms. So that all the talk in town was very much about liberalization, some would argue neoliberalism, and free market capitalism. Then came a second date, which I would argue changed this. And I was intimately involved first as foreign minister, later as prime and finance minister. And that was, of course, the collapse of Lehman Brothers, the sovereign debt crisis, the financial crisis, which then finally led to a euro crisis. In that stage, the pendulum from market swung towards state and more regulation. And who had a key role in this? Well, of course, ECFIN and the European Commission. And I think that's great. That's exactly what we needed. We needed more regulation in the financial markets. As an institutional nerd, having negotiated Amsterdam, Nice, the Constitutional Convention, and Lisbon, I would argue we would have never gotten as far in financial regulation as we did, was it not for the 2008 crisis. And then, of course, the third date is going to be COVID and has been COVID. What we will see, inevitably, political will or not, is an increased role for the state. I think at this particular juncture in time, it is necessary. We need state involvement. I have become overly Keynesian in this particular moment, but I think in the long run it will be dangerous. At the end of the day, it's always a balance, trying to find the proper allocation of resources between state and market. And here I come to my third and final point before concluding. I think we really need to move beyond this old-fashioned, almost geriatric ideological debate between left and right, between capitalist and socialist, between freedom and regulation. That is a world that does not exist anymore. Now, the EU itself is about the liberalization of markets. It is about the four freedoms: free movement of goods, services, labor and capital. And you saw what happened in the beginning of COVID. What did the member states want to do? They wanted to stop all of that, and immediately, and they used every argument they possibly could to do that. But what did the Commission do? It fought back, and it fought back extremely well. Because all of us understand that without market liberalization, driven by the European Union, national welfare states would not be viable, or, as a matter of fact, they would not survive. So the EU does the freedoms, the member states do the redistribution. The member states provide the public goods, and the level playing field is provided by the European Union. So if market is about exclusive competence of the European Commission in competition, in the four freedoms, and in trade, then I do not think that we should, in the long term, destroy that. So therefore, within my 8 minutes, I will conclude with the following. Number one, I think it's inevitable that in the short term we will have an increase of state intervention, and I think in a crisis situation that is good. Number two, in the long term I do not think it's desirable. We have seen that, what happens when you start closing borders and when you start taking anti-liberal measures in the economy. It simply does not work. Number three, I think, as a matter of fact, that what we need to do is to extend the role of the European Union. And here is where I actually agree with Sharon. This is where it all counts. And then the question is, what is going to be the final balance? And let me tell you my prediction, what's going to happen. Well, the EU goes through three phases. First, there's a crisis. Second, there is a chaos. And third, there is a suboptimal solution. And that's what we're going to see again. In other words, let's keep on working at the balance between state and market. We'll never get it right, but it's a good argument to have. Thank you very much.
Well, thank you for that. We have heard your arguments both ways, but this is a time I like in a debate. This is where you get to the rebuttal, and you're going to get 5 minutes, Sharon, to respond to what we just heard. The floor is yours.
I think, to the audience, we can draft Alexander, because what he said is in the short term, we do need state intervention. And we would agree with him on a lot of points. The trade unions fought to keep the essential supply chains open. We fought to get occupational health and safety protection to frontline workers, including, of course, health workers, but all those transport and service and production workers beyond that. We're still fighting that game. Indeed, we're fighting to get health and safety as a fundamental right. But no one is opposed to trade. No one is opposed to, indeed, open borders, certainly not the trade unions. It's the nature of the rules that govern them that have become so broken. Now, Alexander, you live in the Nordic paradise, And exactly your story is one that we wish governments around the world would heed. Because indeed, I'm a great fan of the Swedish economy. And your Prime Minister yesterday, with your Finance Minister, delivered a budget that was all about people. But that's not the case in the rest of the world. It's not even the case in the rest of Europe. And indeed, if you go back to the Swedish countries, let's take Sweden, because I'm there. In the 1890s, they were very poor. What did they do? They built social protection systems, and everybody had a sense of security. Yes, they pay high taxes, and indeed we support that because they built their wealth collectively off the base of shared prosperity. Now, if that was the model for the rest of the world, I think Alexander and I could sit down in good old-fashioned social dialogue, whether he's the Trade Commissioner now or in the future, or a foreign minister, or whatever his future is, and actually talk with our colleagues on both sides and the employers who want a different future, what it looks like. But if we do not put the rule of rights, the social pillar, people's right to a minimum living wage, to collective bargaining, to actually have the grievance procedures, the rule of law that protect them from exploitation, if we do not put the just transition measures in place where no one is left behind, workers, communities, and if we do not look to a future that is absolutely balanced between an economic future but the role of people within it. And I don't mind what the ideology is that people put around it, but people first is what we have to have from our governments, and how you build an economy that serves them. I'll tell you what I'm facing today. Today I'll address the UN finance ministers. On Thursday, the Labour ministers of the G20. And we've asked for, the rules of the game to be enforced. It's true. But we also want to see one thing, those 70% of people without any social protection worldwide. Imagine that. And some of them, by the way, even exist in that state within developed countries. But we want for the poorest and most vulnerable, in what's already a $10 trillion spend, way beyond the 8-9 crisis, and we'll probably double that by the time we can build a more secure future, or at least see the hope of it. Indeed, we want around $35 billion a year collectively, globally, for the poorest and most vulnerable countries to indeed establish universal social protection. This shouldn't be a battle, but it's indicative of the lack of coherence, indeed around the issues that Alexander raises, but around the issues that concern people: jobs, wages, the right to bargain collectively, the commitment to social dialogue, the rules of the game that break up monopoly power. Governments, workers, employers and community in the fight against climate, but in the fight for rights, are critical. And I would say to you that if you want one piece of example of what's wrong with our world, I read those stories about Russia and America spying on each other about vaccine technology. Why on earth can't we work together as governments to see there is a vaccine against this insidious virus for everybody? The interdependence of a world Alexander paints is indeed about everybody. If one country, if one people are sick, then the trade that he talks about will shut down. So we're in trouble. Global demand slump. Jobs are, a dream for many, many people. Minimum wages, collective bargaining, these things are the tools for trade unions to share prosperity, and yet they're under threat everywhere. But in the end, it's about jobs, it's about climate action that is just, and indeed it's about wages and social protection. That's what will give people hope. And I'll finish with a statistic that will shock you. But those people, 2/3 of the people who tell us what they want, which is the things I've talked about, vital public services, taxation where corporations actually pay their tax, rights, jobs, climate action, etc. Of those people, they feel excluded from the voice that governments listen to. Think about that and what it means for our democracy. If we don't rebuild a very different future where people are at the centre and the economy serves people, then, and I think Alexander, frankly, is in this frame, no one is arguing about the rules of the game in terms of global trade, except that it cannot be mindless and it cannot be at the cost of exploitation of workers or indeed their countries, while dominant nations win every time.
Okay, well, we've heard the arguments. Alexander, how do you respond to that? You have also 5 minutes.
Here's my classic rebuttal in 3 points, starting by saying it's wonderful, Sharon, that you want to draft me as well. I'm an avid cyclist watching the Tour de France, doing a lot of work against headwind. I think we can find a common tone. Point number one, I am not in the Nordic paradise. I am in a Florentine paradise here in Florence. And secondly, I am not Swedish, I am Finnish. But yes, I do have a Swedish name, and yes, my mother tongue is Swedish, and yes, I do love our Swedish neighbors as well. And I do agree with you. I think there are a lot of good things with Nordic capitalism or Nordic welfare states, where those to be able to be adapted on a European or otherwise level, I think many of us would be better off. My point number two is to avoid polarization. And this is what I'm really worried about. And Sharon, I understand you have to push the bucket of the trade unions. But I make a pledge to you and make an argument that the way in which we work is different from the way in which our markets and our societies were established many decades ago. And we all need to adapt to that. And if we use language whereby we talk about exclusion, dehumanization, movements against liberal trade, dominance of corporates pitted against the workers and communities, I think we're barking up the wrong tree. There are people on the extreme right that use that method. There are people on the extreme left that use that method. What I want to see in the survival of trade unions and industrialists is that you guys start cooperating, not pitting yourself against each other. If you want facts, which you said, I give two recommendations, not only to you two, but all listeners. One is Hans Rosling, Swedish, now unfortunately late medical doctor, his book Factfulness. Please read it. This world is a hell of a lot better off than what it was 100 years ago, 50 years ago, or 10 years ago. And secondly, Steven Pinker's Enlightenment Now. And I don't say this only because I am in the city of Renaissance. To all youngsters out there who are looking at their job careers, or to all parents who have youngsters who are thinking about it, I finish off by giving 3 pieces of advice for the future of work. I have a 16-year-old son and an 18-year-old daughter. Their life expectancy is almost 110 years. I do not foresee their careers being with the workers against the industrialists. They are most probably, throughout their life, going to be self-employed in different types of formations, in jobs we don't even know what they're going to be like in the future. So when they go into this world and when they go and study, they need 3 things. Number one, they need to learn how to analyze the world. The world is not, and education is not, about memorization. It is about analyzing and connecting different types of dots. Number two, they need to learn how to take care of themselves. And by that I mean that they're going to be in a stressful career path whereby they need to take care of both their body and mind throughout their lifespan. And number 3, and this is most important, and I'm sure that Sharon will agree with this as well, we're moving towards a world where robots and algorithms are increasingly doing tasks that we used to do, both physical in the factory or otherwise, and mental at your office, where, for instance, all of us are information managers standing in front of a screen. What is the most important asset that you have as a human being? It is empathy, the way in which you connect and relate to another human being. So let's try to avoid all of this juxtaposition black and white, pitting market against state. Think about things a little bit more broadly and do it through empathy. Thank you very much.
Well, thank you so much to you both. Thanks for those arguments. And we've also established that Alexander Stubb is Finnish. He's not Swedish, which that's also key. But on a serious note, and now going back to our debate and our panel, we want to put back that question. We want to bring back the Slido poll for a second time and get your views. So remember, the question was, should the state have a bigger role in the economy? Is it inevitable? Is it desirable? Remember, you can vote on Slido. That's SLI.do and use the code EUBEF. So get voting on that. And while you're voting, let's just remind ourselves of why the state or the role of the state has become such a big issue during this pandemic. We've seen states across the world responding to the crisis by acting to protect jobs, incomes, businesses in this unprecedented time. With COVID-19, we're expecting that 71 million people could be pushed into extreme poverty worldwide. So how could they not take action? When you come to Europe, you do see about 260,000 companies across Europe that could also face financial difficulties as a result of the crisis. And these companies employ around 25 to 35 million people. Now, governments across Europe, supported by the European Union, are spending billions of euros on temporary wage subsidies to avoid those mass layoffs, which also clearly show that the state is gaining importance. But the question is whether these are just extraordinary measures in extraordinary times and therefore temporary in nature, or whether we're seeing a permanent change in the role of the state in the economy. After all, because of the lockdown, European businesses now stand to lose about 720 billion euros this year alone, and that is more than the annual economic output of Finland and Austria combined. Now, how easy will it be for governments to wind down such support? A lot will depend on the strength of the recovery, but is an expanded role of the state desirable? Governments have already spent, and we've seen debt in Europe reached new record levels, and as the previous crisis did taught us at one point, that could pose a risk to the economy and prove unsustainable over the long term. So you have to keep all of this in mind. Now, let's try to see if we have those votes coming through. If you have been voting on that, remember the question was, should the state have a bigger say in the economy? Should it not? And we see that 60% of you, 60% of everyone who voted in this poll actually agrees the state should have a bigger say in the economy, and it's inevitable. So thank you so much to everyone who voted. We appreciate your point of view on this, and we appreciate taking the time, of course, to vote in this debate. And also I want to thank Sharon and Alexander Stubb for, before that, participating in it. And, you know, it was interesting, to say the least. So thanks for that. And now, for our next segment, I'm happy to hand it over to Sasha Vakulina from Euronews, and she will be joined by another special guest. That is Commissioner Paolo Gentiloni, who will be taking questions from you. And, you know, if you want to get your question to the Commissioner, make sure, again, that you go on Slido, that you use that hashtag that we're using, and that you put it to us so we can pass it on to the Commissioner. Sasha will do that for you. So grab your phone, head to the BEF 2020 website, send those questions on Twitter or on Slido. Use that code EUBEF. Sasha, as I mentioned, will make sure that the Commissioner gets those questions. And let me now welcome Commissioner Paolo Gentiloni, and I will give the floor to Sasha before I see you back after a very short break.
welcome to our next session. My name is Sasha Vakulina. I'm Euronews business editor, and I'm very pleased to be hosting this Brussels Economic Forum conversation with our next guest, European Commissioner Paolo Gentiloni. Mr. Gentiloni is the Italian commissioner in the von der Leyen Commission, where he is in charge of the economy portfolio. In less than a year as European Commissioner, he has had to face an unprecedented number of challenges, probably more than some of his predecessors faced in their 5-year terms. And among, of course, some of the key tasks for the European Commission and Commissioner Gentiloni in particular have been the launch of the Green Deal, the suspension of the Stability and Growth Pact, the creation of the SURE instrument to protect workers, and, of course, the Recovery Package Agreement and the presentation of the Next Generation EU proposal. In our interview, we will be discussing these and other key issues for the future of the EU economy, including the role of the state, fiscal policy, and the green transition. Now, let me remind our viewers that you can send your questions on Slido now or join the conversation in Twitter. Just enter sli.do in your browser and use the code #EUBEF20. Commissioner Gentiloni, thank you for being with us today at the Brussels Economic Forum.
Pleasure. Thank you. And indeed, what an extraordinary period we experienced.
Absolutely. And let me just follow up on something that's been closely linked to the debate that we've just heard and followed together here a bit earlier on the role of the state in the economy. In the 5 biggest European economies alone, and that is Germany, France, Britain, Italy, and Spain, 45 million people had their wages partially covered by the state to keep them in jobs. Does this mean an expanded role for the state in the economy is inevitable and desirable after the coronavirus crisis?
Well, let me recall that Robert Lucas, the American Nobel Prize winning economist, said, I guess everyone is a Keynesian in foxhole. And by the way, he was not Keynesian. Back to your question, yes, my answer is definitely yes. The role of the expanded role of the state is first inevitable. Just think to the employment consequences. Figures that Eurostat delivered a few minutes ago are showing how strong the impact in employment is, despite the effort of all member states and despite this extraordinary new initiative proposed by the Commission that we call SURE. It is also desirable because if we want to reorient our economies towards the digital and green transition, we need a strong role for the state. But we have to add that it is also challenging because not only because obviously this expanded role should not come to replace the private sector, but also because the expanded state aid should not disrupt the level playing field in the single market. We have different strengths from different member states, and if we don't have rules on state aid, this could enhance the divergence inside the single market. And finally, very clearly, a stronger role of the state has nothing to do with models of authoritarian capitalism that we are looking outside the Union and sometimes with some temptation also inside the Union.
Gosha, the role of the state in the economy is also very closely linked to the ongoing discussions on the fiscal rules, of course, and the general escape clause and the economic governance review. What are the Commission's plans with the state aid flexibility and the general escape clause? How long will these remain in place? And should we rethink the way we approach debt?
Well, of course, we will go back to common rules. So both the temporary framework for state aid and the general escape clause are not forever. We have 2 important decisions to take. One is the timing, because it's absolutely crucial to avoid to go back to tightening rules too soon. We need to give our economy the necessary time, and this means that we need in 2021 to keep a positive fiscal stance in our economies. And second, what kind of rules? We were lucky because we were already having a review of our six-pack and two-pack regulations, and I think that this review, this discussion, would be very interesting to update the rules to the post-COVID situation.
And I want now to move to one of the top priorities of this Commission, which is, of course, the green and digital transition, and how this will be linked to the recovery plans of the Member States. Reaching the 2030 climate and energy targets will require additional investment of 260 billion euros a year by 2030. Decarbonizing Europe will cost 4.6 trillion euros. That is 18 times the cost of the Apollo program that put the first man on the moon.
Yes.
Are you confident we can reach that? What will be the role of the recovery instrument in that?
Yes, by the way, we could make another comparison, the recovery package and the Marshall Plan. In fact, the recovery package in the countries where you can have this comparison with the Marshall Plan is even bigger than the Marshall Plan. But in any case, I think that the task is very, very hard. But the European leadership is absolutely necessary. Who else? What other international political actor, apart from the European Union, could play a leadership role in the green transition? Nobody, to be honest, at least not in this moment. So we have to bring this task to its goals. And to do this, we need to coordinate all the national recovery and resilience plans to this priority. We are fixing a threshold of 37% of each national recovery plan dedicated to environmental and climate initiative, a very high threshold. And then we need to facilitate public investment. And here we are back to the fiscal rules. We will need, in our discussion on the new common fiscal rules, to find ways to facilitate public investment, especially for our twin transitions.
And the last but not least, before we go to the audience questions, I want to zoom in on the recovery package with you. We're still going to be below the 2019 GDP levels at the end of this year, and the rebound will be uneven, as you've said. What else can the EU and the Member States do to boost the recovery? Will the recovery package be enough? And are you satisfied with the agreement of the leaders?
Well, I'm quite satisfied. You are never fully satisfied because there are always things lacking. And I perfectly understand the European Parliament saying that on some goals the agreement was dismissive. But overall, I think it is an extraordinary agreement. And so our first task is implementation. I would say we are lucky to have the German presidency in this semester, because I'm sure that the German presidency will be very active and effective in helping this implementation. Politically, because we need the ratification of several parliaments, and also on the content, on the technicalities. A lot of work has to be done. And second, we need the quality of the recovery plans because, well, the Commission is not a financial intermediary. We are not raising money in the markets and transferring this money to national governments. Of course, national governments have the ownership of the recovery and the resilience plans, but these plans should be coordinated with our common goals. And this is a really fascinating task for the Commission and for the Member States in the next few months. So implementation, quality of the programs, and then new initiatives, especially on own resources, and among these, the carbon border adjustment, which is, I think, a crucial mechanism if we are serious on this green transition.
Let's now go to the questions from the audience. Of course, I've got to remind you that as for the previous sessions, you can ask them via Slido using the code, and you can do it on Twitter with the hashtag EUBEF20. And some of the questions we're receiving, there is a recurring theme among all of them is the social impact of the crisis. A viewer asks if there should be an EU framework to guarantee an adequate minimum income and decent minimum wage. So this is one of the biggest concerns with the questions that we have been receiving during our conversation. What's your take on that?
Well, the social dimension was key in our first reaction. I just reminded SURE, and we are now ready with this SURE program, which is distributing 100 billion and on top of the national schemes. This is very clear if we compare the European situation to the US situation. Yes, we had consequences in our labor market, unemployment, and especially employed people decreasing, but nothing comparable to what happened in America in the last weeks. This sure was a big effort, something we were discussing since 12 years, and that we decided in 2 months. And then we are working, especially my colleague Nicholas Schmidt is working on the minimum wage. We know it's not easy because of difficulties both in countries where the social situation is not advanced, and also, on the contrary, in countries where the social situation, the social welfare is very advanced. In both group of countries there is a sort of skepticism. But I think this is the right moment to try to have minimum wage in Europe.
Another question from the audience. One of our viewers, Boris, would like to know how the Commission can ensure that the national recovery plans are in line with the EU priorities. And how will you make sure the governments will implement reforms and not just cut taxes?
Well, we can be sure for the simple reason that we are the Commission, supposed to propose to the Council the implementation, the approval of these plans. The process means that we are discussing in the next month these plans with Member States and stressing the ownership of national governments and Parliament. But it will be a dialogue. At the end of this dialogue, beginning of next year, we will propose to the Council the approval of these plans. So here is our task and the possibility to respect our priorities.
I've got another question on taxes and taxation. This is something that seems to be a very important and interesting issue for our viewers and everybody who's following, of course, the Brussels Economic Forum live. On the role of the taxation and the way what can it play in this transition, in particular, several people asked about how the role of digital taxation and green taxes is reaching the goals for the transition.
In general, I think it's very important, because if we are issuing a common debt, and if we establish that this common debt should be repaid from 2026 to 2056, 30 years, but the beginning of these 30 years is 5 or 6 years from now, how will we repay this? Will we ask again to Member States through their GNI to repay this debt? Or will we be able, with new own resources and also digital taxation and green taxation, to repay? I think that the first scenario is a failure for the Union, and the second one is the success. And so we are working very hard on own resources to obtain this success.
And the final question from the audience, because we have to unfortunately wrap it up. We could carry on. We've got so many questions, of course, from the viewers online. Our audience wants to hear more about how the Recovery Fund will support small and medium-sized company? That's, of course, a great question, given the fact that SMEs are definitely the backbone of the European economy. And some of them seem to be concerned about the cuts agreed by leaders to the InvestEU program. Some of those businesses. What do you think about that?
Yes, indeed, it's one of the decisions that we are regretting as Commission, the fact that InvestEU was not strengthened as it should have been. But indeed, this window for small and medium enterprises remains in the InvestEU. And recently we added to this a strong recapitalization of the European Investment Bank that allows to the EIB programs with 200 billion euros in support to small and medium enterprises. So it's not perfect, but we have new tools also in this direction.
Thank you so much, Commissioner Paolo Gentiloni, for this conversation, and thanks to everybody following us online and asking those questions. Thanks a lot for this conversation.
Thank you.
Well, thank you to Commissioner Gentiloni, grazie Commissario, and to Sasha Vaculina for that insightful discussion. And moving on, we want to move to the final part of our event here. And our closing speaker is a politician who spent a very long few nights here in July when he was working on a very tough negotiation and succeeded in what is a not so easy task, agreeing and getting 27 heads of states to agree on that historic recovery plan for Europe. And I am, of course, referring to the president of the European Council, Charles Michel. And President Michel, of course, is an experienced politician who served as Prime Minister of Belgium from 2014 to 2019 before being elected head of the European Council last year. So, President Michel, it's a pleasure to have you with us today here at the Brussels Economic Forum. The floor is yours.
Thank you, Maria, and thank you to everyone watching and listening. And thank you, Paolo, for inviting me to this forum, a major event for European economic debate. Indeed, in July, European leaders reached a deal on our next budget and our recovery plan. It wasn't easy, but it was a success. In fact, it was such a success that requests for me to speak have multiplied by 20. Of course, this achievement belongs to the European leaders and, most importantly, to Europe as a whole. This agreement was a major step to our vital objective: European strategic autonomy. European strategic autonomy, because before the summit, many people were skeptical that a deal was possible. But I was determined to make it happen. I was so determined to reach a deal that when journalists asked me how many days the summit would last, I told them, if necessary, I'm ready to ask the Belgian Prime Minister, I know her very well, to close all the Belgian airports. And after 4 days and 4 nights, we reached a deal, and you know that no airports were closed. Why was success at this first summit so critical? We had to act quickly and decisively, because uncertainty is damaging. Think back to commentary before the summit. It's true, European leaders had divergent views. Some challenged the Union's borrowing on financial markets to support member states with grants. Some thought the amounts were too high. Others thought they were too low. And at the start of the pandemic, Europe was criticized for reacting too slowly. In fact, the reality was quite the opposite. Compared to the great financial crisis, Europe took charge with exceptional strength and speed, precisely because we learned the hard lessons of that crisis. And decision makers, both at national and EU level, recognized the urgency and took the difficult decisions. Europe's overall economic response has been far superior to the stimulus packages of the United States or China. And this bold European response was fundamental to protect our citizens and safeguard our businesses. The financial markets have also recognized our comprehensive action. But let's remember the atmosphere back in June and July. Enormous expectations were rising, the pressure was building, and so were the doubts and uncertainty. And while uncertainty is a political risk, it's also an economic one. We know that the impact of economic shocks can last long after their causes have been addressed, for example, depressing the labour market and eroding skills associated with prolonged unemployment. But there are other ways a crisis can undermine long-term growth, such as undermining confidence. As companies lose trust in the future, their appetite for risk decreases, so does their appetite for investment in key areas like innovation. And employees are less keen to develop new skills. It was therefore crucial to act quickly, but also with strength and with unity. And that's exactly what we did in July with one strong, clear response to this unprecedented crisis in the spirit of our founding fathers. In fact, this was a first for Europe in many ways. The first time the European Union will borrow to invest and to reform. The first time such a jaw-dropping amount of 1.8 trillion euros has been negotiated for Europe. And the first time a major part of the EU budget is linked to our climate ambitions. And the first time our budget will be linked to the rule of law. And that's not all. We also committed to creating new own resources during the next budgetary period. A few words about this. Establishing these new resources is of the utmost importance. Not only because creating new substantial revenues will be an irreversible step in strengthening the Union's capacities, not only because environmental taxation will make a pivotal contribution to our carbon neutrality goal for 2050. In my opinion, it's much more than that. We will not accept that environmentally substandard goods unfairly compete with European products, while at the same time damaging the planet. And we are ready to establish a carbon border adjustment mechanism in line with an improved emission trade system to protect our level playing field. If foreign companies want access to our market, we expect them to be on the same footing as our European companies. We are sending a message not only to our citizens, but also to the rest of the world. Europe is a world power, and we are ready to firmly defend our interests. This is what we showed in July. But of course, important steps remain to get this agreement over the finish line. The European Parliament's consent and the ratification by member states. And then comes the hard work, because this recovery plan is not just a simple stimulus plan. In my opinion, it's much more than that. It's a transformation strategy that will lead us to the Europe of the future. This is a Copernican moment. This strategy will build on its two main pillars, the Green Deal and the digital agenda, we enforced by an industrial plan for a more independent Europe. And to make this strategy sustainable, we will modernize our fiscal rules. And we never forget what underpins these plans, our unique set of European values. It's the why behind all our actions to make our societies stronger, fairer, and more resilient. The Green Deal will protect our planet and our quality of life while creating wealth and increasing our well-being. Europe's digital strategy will unlock the promise of technology and improve the lives of our citizens while respecting their fundamental freedoms. Our industrial strategy will foster greater independence and make sure we have access to all the necessary resources to ensure the prosperity of our citizens. This includes, for instance, greater autonomy in producing processors, vital medicines, and other essential products. Finally, our fiscal rules, these rules, give member states the capacity to act in hard times. COVID-19 has shown the pivotal role of the state in protecting livelihoods and businesses. But we must remain vigilant. There is no magic money. As we implement our recovery plan, every euro must be used thoughtfully and efficiently. Europe's recovery plan is not a 3 or 7 year strategy. It's a 30-year strategy. Our prosperity will be founded on democratic and human values, and for this to work, we need trust. As a law student at the Free University of Brussels a long time ago, I was strongly influenced by a professor. Her name was Nelly Schmitz. She offered a Schumpeter workshop as part of her political economy class. And I never forgot her words. Innovation and progress go together. We all know that confidence is the key to democratic legitimacy. Confidence is also key to transforming our economies and our social model, vital to making the success of our climate and digital transitions. Dear friends, we believe in our future, and we are sending one clear message. Europe is united and confident. Anchored in our values, Europe projects power, and we are ready to act to transform our economic and social model with one constant goal: greater benefits for our citizens. European strategic autonomy, I repeat, European strategic autonomy, these are not just words. The strategic independence of Europe is our new common project for this century. It's in all our common interest. 70 years after the founding fathers, European strategic autonomy is goal number one for our generation. For Europe, this is the real start of the 21st century. Thank you.
Well, thank you, President Michel, for taking the time to be here with us today at the Brussels Economic Forum. And I have to say, we've reached the end of our event. You know, this is the sad part. But it's been a busy morning. We've certainly had a lot of interesting discussions happening here, and we're certainly going to continue to talk about those issues, certainly on the minds of decision makers here in Brussels in the few months to come. I also want to thank each and every one of our speakers for taking the time today, and our media partners, Euronews and the Financial Times. And I also really want to thank especially you, the audience, for tuning in and really all of your participation. I'm in fact being told that at one point we've been 15,000 people watching at the same time, and all of your questions, all of your feedback, we really appreciate it. And, you know, we really hope to do this again next year in a more usual in-person format, but certainly still retaining that discussion, our speakers, and that audience participation. And now everyone, of course, who've registered for that exclusive live session with Martin Sandbu from the Financial Times, you would have received a link to that, so connect on that, and the session will start at 12 o'clock. You'll be able to submit some questions, so get your camera and your microphone ready. And to the rest of you, again, many thanks for making this 20th anniversary of the Brussels Economic Forum so special. We'll see you next year in 2021. And I also want to take this opportunity to thank everyone at DG Finance, the whole team, staff, crew, technicians that made this possible. Thank you so much. Take care. Stay safe. We'll see you next year.